Stocks notch up some more gains with mid-caps leading the charge. Realty, Telecom and metals are prominent gainers while financials are the soft spot. Now Vedanta joins the fundraise rush with an offer to mop up around 7,000 crores via QIP to likely fund capex or pay some debt. The offer precedes the split of businesses expected by the end of FY25. Voda Idea and Bharti Airtel hope for some relief on their AGR dues after the Supreme Court agrees to hear a curative petition. While Voda Idea owes around 70,000 crores, Bharti's dues stand at around 36,000 crores. Experts tell CNBC-TV18 that a significant step up in government allocation for infra from the interim budget is likely. They see roads and railways accounting for the lion's share of spend.
Good afternoon. You're watching us here on Halftime Report. Exactly a week to go for the CNBC TV18 budget, the mega budget. We have the budget box out here as well. But ahead of that, it's not just the box which is green. We have all the other indices which are in the green as well, barring the Nifty bank, which is flitting between red and green as we speak. And that will be extremely important to watch out for in the next couple of hours of trade, because ahead of the holiday tomorrow, we have both the Nifty bank as well as the Nifty financial services expiry that will play out. The good part about today's trading session are the broader markets. 1,500 stocks advancing for nearly 800 stocks which are declining. So we have a big distance between the green and the red line. I'm Manglam Malu, with me, Ekta. Hi, Ekta.
Hi, Manglam. Yes, absolutely. And what really stands out is that we are building on our gains. Like you mentioned, the mid-caps are doing well. We have the advance decline ratio. The breadth of the market is favoring the advances at this point in time. And what we are seeing is that rally in the entire PSU space, which is continuing into today's trading session. So if you just look at it on a week-to-date basis, yes, at current reckoning, it's only 1.5 sessions that we're talking about. But nonetheless, the Nifty PSU Bank Index is up around 3.4%. The BSE PSU Index is up close to around 2%. And the Nifty PSE is already up around 1.8%. And let's see where that goes. But that seems to be the big trend which is panning out in today's trading session. But earnings this week, we have a lot to watch out for. So we have Asian Paints, which will be declaring numbers tomorrow, along with LTI Mindtree, Infosys on July 18th and Reliance on July 19th as well. So it's going to be a busy time in terms of earnings. And then we're going to top it up with the union budget on July 23rd. Not to mention that the end of this month, we have the US Fed meet also on July 30th and 31st. So it's going to be a packed month because we have earnings. But for the next couple of days, for the next week odd, we have a lot to watch out for. With the crescendo being really the budget.
Absolutely, take that point entirely, Ekta. And ahead of Asian Paints numbers, actually, not only is the stock doing well, we have the entire FMCG pack which is doing well as, the crescendo builds to the budget as well. Hopes of more money in the hands of people. Monsoons haven't been too bad either. In fact, whatever deficit was there in the month of June has now been more than made up in the month of July itself. So we'll get more clarity on how rural demand is with all these numbers. The FMCG index actually at the high point of trade. But another space which is abuzz in today's trading session is the telecom space. While Bharti Hexacom is surging on the back of a positive brokerage note that has come by, Vodafone Idea and Bharti Airtel hope for some relief coming in on their AGR dues after the Supreme Court has gone ahead and agreed to hear a curative petition. Rima dials in with all the details on why the telecom space is abuzz today. Rima.
Thanks so much for that. So let's start with Bharti Hexacom. As you pointed out, there have been some initiating coverages. So first, a JP Morgan overweight rating on Bharti Hexacom, target price 1280. Not just that, today even IFL has initiated coverage with a buy rating, target price 1267. In fact, most brokerages are bullish on Bharti Hexacom because this is a pure play telecom company. It operates in only 2 circles, Northeast and Rajasthan, where the tele density is lower, which basically means fewer people have mobile phones. So the the market growth potential is quite a bit, and therefore it's one of the best places to play the market repair or the tariff increase story compared to peers like an Airtel or a Vodafone Idea. The other 2 stocks, Bharti Airtel and Vodafone Idea, are also higher in trade, and that rally is sparked on optimism or hope that now that the Supreme Court has agreed to hear the curative petition, which was filed by the telecom companies Vodafone Idea for a rethink on the AGR dues. Now, companies are saddled with massive AGR dues. For Vodafone Idea, the current balance is 70,000 crore. For Bharti Airtel is 36,000 crore. If in the curative petition there is any kind of relief, and the street is hopeful of a 50% relief, because they are arguing that there are some arithmetical calculation errors in the way AGR was computed. If they get that relief, then we're talking about a potential relief of 35,000 crore rupees for Vodafone Idea, which amounts to 5 rupees per share, and for Airtel it amounts to 30 rupees per share. But that's assuming a 50% relief on AGR dues, and that's what the street is hopeful about. Back to you.
Okay, all right, Reema, thanks very much for that. Earlier today, in fact, we spoke to Balaji Subramanian, who's the Vice President of IIFL Securities, to discuss his take on this. Listen in to what he had to say.
See, if you look at the public disclosures of Bharti Airtel and Vodafone Idea, Bharti Airtel has somewhere around 36,000 crores as the AGR dues. This is, including accrued interest, and, this is the full number. After what they have already paid the government in the past, etc. And the corresponding number for Vodafone Idea is around 70,000 crores. I think the way it can pan out is that the Supreme Court allows the government and the telcos to sit together and resolve any calculation errors. And based on what Vodafone had done and Bharti had also done, it does appear that the relief can be to the tune of 50 to 60%. So if one were to take a 50% relief as the number here, then we are talking about an NPV relief of nearly 35,000 crores for Vodafone Idea, which would probably equate to a little more than 5 rupees per share. And for Bharti Airtel, we are talking about an 18,000 crore relief, which would work out to roughly around 30 rupees per share.
All right, so that's about the telecom space. Meanwhile,
so 70 का एक स्टॉप लेके यहाँ पर.
All right, flashes coming in from the heavy industrial minister saying that we are likely to implement the FAME 3 scheme in the coming days itself.
Okay, all right. Well, those are some flashes coming in from the heavy industries minister. But nonetheless, we have Paytm, which is under pressure after SEBI issued an administrative warning letter for related party transactions. Abhishek is joining in to tell us more on this story.
Well, Ekta, to begin with, administrative warning letter from SEBI has been received by Paytm, and this is for the related party transaction, or RPT, entered by the company and its subsidiaries, that is Paytm Payments Bank. Now, this was done in FY22. Company claimed that the transaction do not qualify as the, related party transaction in FY22. However, the board and the audit committee have felt that this can be considered as material, related party transaction, and they have passed a resolution that all the RPTs with PBPL, that is Paytm Payments Bank Limited, will be within limits. So violations have been viewed very seriously by SEBI, and they have warned the company to be careful in future and improve the compliance standard that is there at Paytm. Now, Paytm has also responded to this SEBI inquiry. They say that there is no impact on financials, operations, or other activities of the company. Now, company is committed to upholding and demonstrating the highest compliance standard. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's on Paytm, which is in focus. But the other big stock and the big story that we're tracking today is Vedanta, which has launched its $800 million QIP. Nigel is here to tell us about how the proceeds are likely to be used and how this fundraise is likely to aid the company's growth. Nigel.
Well, that's right. Vedanta Limited has launched its $800 million QIP, which includes the base issue of around $600 million with $200 million of a green shoe option. The timing is perfect. The globe braces for rate cuts, which will result in a softer dollar, and it served as a booster shot for base metal prices. And so in that context, Vedanta is perfectly placed. Well, what can Vedanta use these funds for? Well, they can use the funds for its ambitious growth capex of around $3.5 billion, which has been lined up over the next 2 years. It can also look at retiring the high-cost debt and ultimately make a bit of a pitch for its rating upgrades. Let's see whether or not that happens. Well, the QIP entails a dilution of around 3 to around 4% on its total equity base. And so the promoter holding will get diluted from around this 59% odd mark as of the last reported number in June 2024. But there will be a lock-in of around 60 days for the promoter entity. Well, the promoter, Vedanta Resources, well, it's in far better shape than what we have seen in the recent past. It's reduced its net debt at the standalone level, and it's well placed to fulfill the $1 billion obligation for this fiscal, that's FY25. How do they do that? Via brand fee payments from Vedanta as well as Hindustan Zinc, the promoter stake sale that just got concluded in the past month, and also the dividend payouts. Some part has been paid and some part is due in the coming fiscal. Well, brokerage firm Phillip Capital, they have given the stock a target price of close to 550 rupees per share. And as the table indicates, well, bulk of this value is coming in from the stake that they have in Hindustan Zinc, which is 65% stake out there, and also its aluminium business. While there is a bit of a negative value that's ascribed to the debt in their books of around 173 rupees odd. But there is a potential upside risk to these estimates on two counts. One is on the net debt. That what they have assumed, well, it could be relatively lower. Why is that? Because of this fundraise and also the healthy cash flows. While the aluminium EBITDA number, that could be relatively higher as well, because they're looking at higher captive sourcing of alumina, coal as well as bauxite, which could lower the cost of production of aluminium by around $250 on a structural basis. Well, the street further expects the demerger to be completed by the end of this fiscal, which could unlock further value for minority shareholders. Well, before we wind up, let's highlight the three key risks which could derail this entire bullish outlook. One is the higher debt at the listed entity. Well, if it's used to service the promoter debt, that will be viewed negatively. The second factor is delay in commissioning of some of this backward integration that we're talking about for its aluminium operations. And the third factor is, suppose they invest all this cash that they throw up into a low return asset or an unrelated sector, that in fact will be a bit of a negative. For Vedanta, the ingredients are in place. The question is, will it finally deliver for shareholders?
All right, Nigel, thanks a lot for that. Will it finally deliver for shareholders is the question that we will get an answer to as the company raises funds via QIP. Meanwhile, there were flashes at the bottom of your screen, and these were pertaining to MTNL, where the government has sources say that the government has asked MTNL to monetize its land assets at the earliest. The stock has seen a big spike. It's up around 10%, and it's seen a bit of a rally over the last few months already. But this is not the first time news of such nature has come by. Let's see, how fast they can actually go ahead and monetize some of the assets that they do have, because this has been the big thesis on MTNL over the last many, many years as well. But one of the stocks which is surging in today's trading session and on the back of fundamental news, and that is Hatsun Agro, because they reported their first quarter numbers yesterday. The stock is up 7%. It's on account of a couple of factors that these numbers look very good. One, the summer season. There was extreme heat wave. The company has been pushing on increasing its distribution for some of its value-added products, including the likes of ice cream. So that's aided the business. And gross margins have expanded both year-on-year and quarter-on-quarter as well. So to put numbers into perspective, 10.5% revenue growth is what the company has reported, 2,375 crores on the top line. That has resulted in a 39% or 40% jump in the EBITDA, which has turned in from 238 crores to about 330 crores, with margins around that 14% mark versus 11%. So there's a near 200 basis points improvement out there, 300 basis points improvement. The net profit up by 63% as well. The gross margins, both year on year and quarter on quarter, they've seen an improvement. In fact, this is the highest gross margins that we've seen in the last many quarters for the company itself. And why are these margins better at a time when milk procurement prices may be going up? Well, because the management had told CNBC-TV18 earlier that they have prepared well for summer. They're sitting on enough stock. They target 15 to 20% growth in sales in the next 2 years with improved margins. They had already guided for 100 to 150 basis points margin improvement, and value-added products, which a couple of years ago were around 25 to 30% of their sales, are now 35 to 40%. The only two things that we have to watch out for now is how milk procurement prices pan out for the entire industry, and secondly, whether they go ahead and reduce the debt that they had on their books to sub 500 crores by July 2025, as they had earlier guided. And taking note of these, moves on Hatsun Agro, a couple of other stocks are also buzzing around. So pull up something like a Parag Milk, which saw an uptick in yesterday's trading session somewhere in the middle of the day, and now as well has moved to the high point of trade. and the other one is Dodla Dairy. Both of them at the high point of trade. The question is whether they benefit from improved margins or not as well, because both of them have higher milk procurement prices. So reduction in margins may not be very well taken by the state for both Parag Milk and Dodla Dairy. Whereas for Hudson Agro, they don't have to, depend a lot on procurement of milk from outside vendors. So let's see how that pans out.
Okay, all right. Thanks, Bangalab, for that. So all of those stocks are buzzing around today. We need to take a short break, but a quick programming note. Coming up on this Wednesday, 9 a.m. is a very special offering, a big CNBC-TV18 exclusive just ahead of the budget. One of the world's top market strategists is in our studios. Chris Wood of Jefferies will make his bull case for India. Also, don't miss out on an exclusive chat between Chris Wood and these streets stalwarts Ramesh Damani and Utpal Seth. All this on Wednesday at 9 a.m. only on CNBC-TV18. Welcome back. Well, for the markets, it's given up a little bit of gains for the mid-caps as well as the bank Nifty, but nothing to fret about considering that we are sitting at record highs and, the flows have been good in terms of the FIIs as well. So as of now, just about consolidating. The Nifty is higher by around 35 odd points. The Sensex is higher by around 97 odd points. Remember that it was a good US close as well, but maybe the markets are now preparing themselves for domestic cues such as earnings, big earnings, as well as the union budget. But let's move on. Temasek is aiming to invest around $10 billion in India over the next 3 years, says the country head Ravi Lamba. Our colleague Nisha Podar spoke to him exclusively and began by asking him about the impact of higher interest rates around the world and the effect of global events on the liquidity situation globally.
Our investment focus, more of our dollars will likely go to the Americas and India in the next, say, year or so, as we think about what's happening there. And globally, you're right, there's a significant amount of uncertainty on both geopolitics. That's a concern as we think through what might happen there. We're seeing possibly some tail risks from political shifts in Europe, as we've seen in the last few weeks. There's still geopolitical uncertainty out of China, which might impact the export demand out of China. So we think about that carefully. And then we see the positives of that also can happen in certain places where we may see supply chain-led upside, that we might see for India, as India's low-cost manufacturing base helps India do more in the export side. Overall, fiscally, we see the Federal Reserve is likely to keep rates higher for longer. We think the 2% target is uncertain at this stage. The good news is that recession risks have faded. The global economy is strong. On the U.S. side, you see the labor market is resilient, as is growth. So the overall risk framework seems to have come down, which makes us more positive to put more capital to work. As we find there are opportunities on a bottom-up basis in these countries.
Last year when we spoke, Ravi, you said that up to $9 billion for next 3 years is the kind of investment plan you have for India. So by that logic, a run rate of $3 billion of investment has been achieved in the last year?
Yes. So last year we did $3 billion because we found the opportunities. And if we find the opportunities, we'll continue to do that run rate. We think... So if I step back, I think what we think about India right now, India exposure is almost $50 billion in Sing dollar terms. So it's about $37 billion US dollars. So that's our portfolio exposure in India.
Yes.
Over the next 3 years, we're hoping we can put, say, $10 billion to work. Maybe more, maybe less, depending on the opportunities. Our portfolio, our subsidiaries are also investing in India.
Right.
So that amount of investment may be higher, depending on how they invest. And we have subsidiaries like STT Data Centers, Singapore Airlines, Singapore Telecom, Semcorp. They're all investing in India, Ascendus, Capital Land. So their investment journey also shows that they are increasing exposure to India. India has been the best performing market for Temasek globally in terms of returns, and we hope that can continue.
Right. So what is your ambition, Temasek's ambition with Manipal Hospital's investment? Ravi, IPO is something that the market is expecting anytime soon. Is that one of the strategies, and how soon can we expect that?
The strategy simply at Manipal Hospital is to grow the business inorganically and organically. And the decision to buy and build will really be dependent upon the economics of both. And typically, you will find when you already have scale, and Manipal Hospitals is, let's say top 1, 2 operators in the country in hospitals. Your ability to build is almost as efficient as your as to buy.
Yes.
So we will make that decision based on capital allocation and what the right return framework should be. When it comes to an IPO, yes, we will take the company public. There's alignment amongst the shareholders. It comes down to the right timing. Timing is when the company is fully ready, when we believe the business is mature enough for public investors to now invest in it, so that everyone has a good outcome, and when the markets are there. So we will take our time and we will do it at the right time.
Right. Is it at all expected in a year's time from now?
I don't think in the next 12 months, but we will take the company public.
And about two, EV companies, pure play, two-wheeler companies gearing up for an IPO, and of course your portfolio company, Ola Electric, being almost ready. Ravi, in the pre-IPO round, you had invested at $5.5 billion of valuations. You think at the current environment, that is a valuation, and an uptick to that valuation is quite achievable, and your view on part exit from this IPO?
Okay, I don't think it's fair for me to comment on something that's happening right now. All I will say to you is that we are long-term investors in this business because we believe in the long-term growth in the business. The fact that we may be taking some money off for the IPO is a consequence of of helping the IPO happen, and we see this as a long-term play. We're comfortable with the valuation we invested. Of course, we always hope that we will make good returns out of all our investments, so this is no different.
I wanted to take your view on financial services also, Ravi. Of course, one of your portfolio companies is heading for an IPO, Niva Bupa. Insurance has been dynamic over the last few years. How do you view this company and overall financial services currently?
Again, it won't be fair for me to comment on Niva Bupa, but we made the investment on the basis that we have a strong belief that insurance is a great place, huge runway, long way to go, and just started actually in many ways. So we have invested in public markets and insurance. We have invested in the private space as well. The fact the company is going public is just another milestone in its own journey. IPO is a one point in time event, right? Ultimately, we are focused on the long term, and that's how we look at it. Financial services, insurance is a place we will put more capital.
All right, that's interesting opinion coming in from Temasek for their portfolio companies, etc. Just before we slip into a short break, we have a couple of stocks which are spiking. Alembic Pharma has been doing well from the word go right now, up 8% as we speak. First Source is the other one which too has recovered from the lows, and United Spirits. Just before we go into a break, just look at United Spirits. There's been a big surge out there as well. At the bottom of your screen are numbers coming in from DB Corp. 49% jump in their net profit. Remember, year on year, there would be a big skew, largely because of the election event and that aiding their ad revenues, and that perhaps is reflected in their numbers as well. We'll get more details as per, what the advertising revenue this time around has been. Revenue has grown by about 6.5%. How much of the increase has been on account of, the improvement in newsprint prices or reduction in newsprint prices and improvement in margins is something that we will track as well. Take a short break for now. Come back on the other side. We have Sachidanand Utekar, who's joining in with some trading strategies. Holding up with around 40 points gain on the Nifty. We were talking about the numbers coming in from DB Corp. It's the margins which have actually led to the improvement in the profitability. Revenue growth of 6.5%. Margins improved by 700 basis points. There was an over 40% jump in the EBITDA, and as a result of which the net profit is higher by about 49%. The ad revenue up 8.5%. Circulation revenue as well was slightly higher. The stock mildly off highs. Maybe the street was expecting a little more when it came to ad revenues as well. But be that as it may, let's look at the market from an F&O perspective right now. Even as the Nifty is doing well, the mid-cap index is doing a shade better with broader markets seeing better gains. But off highs, we are seeing some bit of, at high levels, we're seeing some supply. And that's largely because of the financial space. The Nifty Bank is in the red. The Nifty Financial Services too is largely flattish. And those will be the indices that we'll be watching out for in the next couple of hours. So for the Nifty Bank, 52,500 where we are right now, 50 points away from that is an extremely crucial zone, because both the call and put at 52,500 are most active, and the straddle, which is a call and a put together, have a premium of 150 rupees. So 150 points on either side. That is 52,350 to about 52,650 is the range that one is looking at for the Nifty Bank. For the Nifty Financial Services, the premium on the 23,700 straddle has about 65 rupees, telling you again that 23,635 to 23,765 would be the range that one is looking at on that index as well. For the Nifty itself, support has moved higher. 24,600 put is very active, and at the same time 24,650 call is equally active as well, telling you that there is supply at levels upwards of 24,700. A lot of long positions added on Coal India, so that's one stock which I'm keeping on my radar. A lot of long positions added on refiners as well. So we have BPCL and HPCL, both of them spiking in today's trading session with open interest spike. Two stocks I'm watching out for from an F&O ban perspective. Balrampur Chini may actually re-enter F&O ban after exiting it yesterday. And Aditya Birla Fashion, the one that went into F&O ban in the early part of the series, may now finally exit F&O ban in today's trading session. And that explains why the stock has seen a bit of an up move as well.
Okay, all right. That's on the F&O space. Well, we do have Sachidanand Utikar of Trade Bulls joining in on the show to discuss the technicals now. Sachidanand, hi. Welcome to the show. Well, the markets have come off a little bit. No worries. But nonetheless, consolidating at this point. So how would you approach it? Would it be more stock-specific or index-specific?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly, index is something that can be avoided as of now. Though if we have the Nifty, which has been trending for almost 29 trading sessions in a row above its 5-day exponential moving average support, which is placed somewhere close to around 24,510. So until unless this particular level holds, we may see this gradual up move in the indices, continuing on the positive side. But when we look at Nifty Bank, clearly it has been oscillating within its previous day trading range. So until unless we don't see a breakout outside this particular range of 52,650 on the higher side, we may not see very strong momentum play. So I think it's better to avoid the indices as of now. In case if we get a dip in Nifty somewhere close to around 24,600, I think that will be an ideal level wherein some long positions can be considered. But as of now, it is better to avoid the indices and focus more on stocks.
So what stocks would be on your radar right now, Sachi?
Mangalam, two stocks, stock ideas on the bullish side. First of all, Godrej Properties has displayed a good strong breakout from a bullish flag formation. Since the beginning of the day, we have seen very strong long built-up positions here. If you look at the entire structure, the pattern target is placed somewhere close to around 3460, and that's why we are recommending building long positions here. From momentum perspective, any decline towards 3365, 3370 would be a good level wherein some aggressive long positions can be deployed. The stop loss for the trade should be placed at around 3330 on a closing basis. The other stock idea which has hit our radar is Marico. Now, if you look at the pattern structure, it looks like a classic rounding bottom formation. The neckline of this particular pattern was placed somewhere close to around 660. So this particular level has been breached confidently, and right now we have seen a good amount of traction here. From an intraday perspective, we may see a swing towards 685, but positionally I think the 700 target is well intact. So I think even here long positions can be deployed, keeping a stop loss somewhere close to around 658 on a closing basis.
All right. Thank you so much for joining in and giving us your views on individual stocks. Marico indeed has moved to the high point of trade. It's the day for some of the FMCG stocks doing well. But what we'll do is take a short break, come back, focus on some of the earnings, particularly from the pharma space. We'll discuss this space with the analyst, the expert, Vishal Manchanda of Systematics joins in after this short break. Well, we're tracking earnings thick and fast, so let's get you our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector daily. And today, Ekta's moved across to tell us what one should expect from the pharmaceutical sector for the first quarter. Ekta.
Thanks for that. Well, pharma companies are expected to kick off FY25 with around an 8 to 10% growth in revenue, led by the domestic business, around an 8 to 9% growth in the EBITDA on account of higher expenses being offset by niche launches in the US, and profit growth of around 10 to 13% year-on-year due to lower interest and tax outflow. Now, domestic formulations are expected to lead with a growth of around 10 to 11%. Company-wise, Mankind, along with Torrent Pharma, Dr. Reddy's, JB Chemicals could see good traction in the domestic sales with a growth of as much as 10 to 12%, with Cipla and Sun Pharma at around a 9 to 10% growth. Key drivers for the domestic business include traction in key therapies, new launches, and increase in market rep productivity. Now, the US business is expected to continue to benefit from drug shortages, mid-single digit price erosion, and sale of limited competition drugs such as Revlimid generic. Estimates are that the US could see around a 6 to 7% growth to around $1.2 billion. Now, company-wise, Revlimid generic continues to aid numbers. Cipla's US sales are estimated to grow to $235 million, up 6% year-on-year. Dr. Reddy's to grow 5% on a year-on-year basis, both aided by Revlimid generic. Aurobindo likely to generate $27 million from the drug, which would be similar to last quarter, while Natco could see margins of around 45% aided by the drug. Now, the likes of Lupin is expected to benefit in the US from key drugs such as Spiriva generics, so they could make sales of around $220 million, and the launch of a particular drug used for overactive bladders, Mybetriq. Now, Sun is expected to see growth aided by its specialty portfolio. So, estimates are that the growth could be around 4% Q-on-Q to $282 million in its global specialty sales. Watch for a few more companies, Divi's Labs, which could report around 35% year-on-year growth in sales led by a low base. Biocon could report around 3% Q-on-Q growth in core biosimilar sales. And lastly, commentary on compliance from Aurobindo on UGR3, Cipla on Goa, and Pithampur and Sun on Halol and Dadra facilities. Let's, as always, leave you with the valuations, which on an FY25 basis look quite punchy.
All right, Ekta, thanks a lot for that. Indeed, some of them looking punchy on an FY25 basis, but what's the street factoring in this time around? And what are the stocks that one should be betting on? Vishal Manchanda, who's the pharma analyst at Systematics Group, joins in now. Vishal, of the first quarter earnings, what do you think will be your pick of the pack? And what are the key trends that you are expecting from some of the companies, reporting numbers this time around?
So I think the best performer for this quarter should be Zydus Life Sciences, led by the US. So they have a limited competition launch there. So as Ekta said, it's Mybetriq, which is going to be very large for them, and even larger for, so Lupin is the other company that's also going to launch this drug, but Zydus probably is going to do much more out of this opportunity. And the US sales should meaningfully rise for them. So that's going to be the best performer. But as you have indicated, the valuations quite build in all of these upsides that we expect in the US. And again, we know these are not structural opportunities. These are these opportunities will pass by, and companies will need to replace them. I think the other trend in this quarter we need to watch out for is lower raw material prices. So as we can see, the antibiotic raw material prices have come down meaningfully. And if you look at companies who have large presence in antibiotics, one is Cipla and another is Aurobindo. Alchem is also another company that should benefit out of the lower raw material prices. Another important aspect this quarter is the last quarter, the base quarter last year was on a low base as far as the India business is concerned. So why on a low base? Because the last year we had seen NLEM price revisions and also ceiling price cuts. So that led to a low base, and probably we should see better growth in India on a reported basis. So all of these should help, and Zydus should be the one that should be the strongest.
Okay, so you're expecting Zydus to be the strongest this time. What about Lupin? Sales are in the US are expected to probably sustain above $200 million. They have that drug which is used for overactive bladders, Mybetriq generic, which they would have launched as well, which I think Zydus would benefit from, along with Spiriva. So what is your estimate on Lupin? How much of a game changer do you think this drug would be for Lupin and the overall sales estimate?
Yeah. So on Lupin, this drug Mybetriq will not contribute as much as what it would contribute to Zydus. So probably Zydus is going to do a very large number versus what Lupin might do, because like Zydus is doing 2 doses while Lupin is just doing 1 dose of this drug. So, and probably the other dose, Zydus is exclusive, while in the second dose, both Zydus and Lupin are there on the market. So I think Zydus has got an upper hand here in this launch. And what was the other question you said?
Spiriva, their total US sales for Lupin.
Yeah, so on Spiriva, I think that should be flattish this quarter. But what happens in Lupin is they are also expected to see erosion in one of their large assets, which is generic Suprep. I think that is about $70-80 million in our estimates for the company, and that should see erosion this quarter because a lot of other companies have launched a copy of Suprep. So that erosion should offset some of the gains they are going to get from this Mybetriq launch, and they also had a few other launches this quarter. But I think this erosion should be steeper for them. So more or less, I think a bit of growth or flattish numbers is what I would see for Lupin.
All right, just a final question before we let you go, Vishal. You said Zydus Life is likely to be the pick of the pack when it comes to numbers this time around, but the stock, if you compare it to something like a Lupin, in the last 6 months, it's rallied about 64-65% as well. So from a valuation standpoint, what do you think is most attractive in the space right now? And which of these stocks do you think has a lot more valued or priced in the current price that there is?
I think structurally, among the larger names, we prefer Sun Pharma and Cipla, where we think these companies can compound longer. And so these are not as much driven by one-off opportunities as the other companies. So the concentration in the US business for the other companies is much higher. So that is why we prefer Cipla and Sun over the others among the larger names.
Okay. Just quickly, wanted your thoughts on 2 stocks, Divi's Labs, in terms of sales, what could they report in terms of margins this time, as well as Sun Pharma when it comes to the global specialty business?
Right. So on Divi's, I think we are expecting strong growth in CRAMS, about 12-13% growth in CRAMS, while on generics, we are expecting high single-digit growth, mid to high single-digit growth. That's where we are. In terms of margin, I think they should be around, on EBITDA, they should be around 31-32% EBITDA margins. So I think the quarter should, on a YOY basis, Divi should look good, but on a QOQ basis, it should be weaker because the fourth quarter for Divi's is generally a high base, wherein they do book large part of their CRAM sales in the fourth quarter. So weaker on a QOQ basis, but a decent numbers on a YOY basis. And on Sun Pharma, I think the specialty numbers, we are expecting a bit of decline, and that decline would be on account of seasonal weakness in this quarter. So we are looking at QOQ decline in the Sun Pharma specialty sales, but on a YOY basis, the specialty sales should grow mid-teens.
Okay, all right, Vishal, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us your perspective on what we can expect in the pharmaceutical space this quarter. We need to take a short break, but up next, we'll get you a lot more stocks in focus.
Welcome back. All consumption stocks are doing well today, but in that HUL has a slightly better benefit here, largely because of the announcement that came in yesterday. A very small announcement from their overall standpoint. They will sell their water purification business, Pureit, to A.O. Smith for about 601 crore rupees. Remember, the FY24 revenue of the water purification business was close to around 300 crores, so sub 1% of their sales. And 601 crore typically does not move the needle for them too much. They have cash of over 10,000 crore on their books already, and this accounts for just 0.02% of their overall market cap as well. But the important part here is they're getting rid of non-core businesses, and this deal is in line with their strategy of focusing on core categories itself, so improves their mental and management bandwidth a lot more, and that's a mild positive. Add to that the big tailwind that all these consumption stocks are seeing right now itself. Take a short break, come back on the other side. We track the commodity space with Manisha Gupta. Chirag Sheth, the principal consultant, South Asia at Metals, joins in.
Welcome back, and joining us on the show now is Chirag Sheth. He's Principal Consultant, South Asia at Metal Focus. Chirag, hi, good to have you. And while, of course, the whole of last week has been conversation about how there's a lot of gold coming under CEPA agreement in garb of platinum, where the duty is 5%. So looks like a lot of things have started moving now. We do understand that there was a meeting between government officials and various gold associations and agencies and big bullion dealers as well. The government clearly seems to be seized of the matter right now. Perhaps it was an oversight, and the government always obviously wants to do the good of the industry, but this clearly has been a loophole which a lot of people seem to be using on right now. What is your sense on what are the numbers right now, and what is all of this conversation headed to?
So I think, if you look at broadly on how much has come in over the last probably couple of weeks, these could range anywhere between 3 to 5 tons of gold has obviously come in. And I think we've seen historically that whenever any such things are highlighted with the government is swift enough to move it and plug whatever loophole is there. So I think there is obviously things are moving in the right direction. It becomes a bit complicated when CEPA is involved, because then it is an agreement which is signed between two countries. So nothing can be done unilaterally. Obviously, the government can bring in more stricter norms so that things can be avoided in the future. But all these things will still take some time before the entire loophole is plugged.
Chirag, there was also a conversation, and this is coming in from officials, suggesting that if there is 15% platinum and 85 and let's say 70% gold and 10% of copper perhaps, then it should be perhaps a SAID and duty put in depending on what percentage the alloy is or the brick is for that matter. You think that is doable?
No, look, I'm not an expert on the foreign trade policy, but I think there are some norms which are there globally when it comes to alloy, where it has been mentioned saying that beyond a certain percentage, if a certain metal is used, then it has to be considered as that metal. So these are, I think, WCO norms, if I remember it right, which are World Customs Organization norms which are there. So I don't know how much changes can be made, but I think only we'll come to know the next few weeks as more and more consolidations takes place among these experts who are there who make these foreign trade policies.
Chirag, as of now, I mean, clearly you have been talking to a lot of people within the industry, and there have been various whistleblowers onto this one as well, because it clearly was construed towards bigger guys, bigger bullion dealers and importers, and the smaller jewelers clearly couldn't make much use of it. And there have been people telling us that there are various these kind of loopholes perhaps in the market right now.
Right, sure. Look, as I said, Manisha, yesterday at CNBC Awaaz and Metal Focus has written about this quite extensively. In a country where you've got 5 to 6 duty structures, things like this will always come up. We've had historically, we saw some, about 4 or 5 years ago, there were these 24-carat spoons and forks which are coming into India under the Indo-ASEAN FTA. Then we had findings coming in, then now platinum with gold. So when you've got 5 to 6 duty structures, these kind of complexities will remain unless and until we do not do away with so many duties. We cannot completely plug any loophole that exists in our foreign trade policy.
Chirag, also, would it be too much to expect anything like this sort coming in from the budget?
Yeah, I think all of us know budgets are usually prepared, a couple of months in advance. So I would be a bit surprised if something comes in so swiftly. But, given with this government, we really don't know what can come in, So always ready for any surprises, if at all.
Okay.
All right, ready for surprises always. Well, with that, what we'll do is we'll, not surprisingly, take your leave on this edition of Halftime Report. Business Lunch comes up next.